Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player.
Good day. Ira Epstein of Linn Associates with your weekend edition of this financial market wrap-up. And we are now sitting on Friday, the 7th of September, 2018, about 4:07 p.m. Central Daylight Time. A down day in the stock market. Of course, the president opened up and said that he's getting ready to put taxes on China. Hasn't done it yet. And then he said it might be, besides the $200 billion, another $267 billion. So I think he's talking now of anything and everything that would come from China having a tariff on it. This must be his way of getting the Chinese attention. I don't know what else it could be. Who's going to pay? Got that what I'm doing? The finger. Me. I'm going to pay. You're going to pay because it's a tax on us. The stock market, when it saw it, fell pretty hard. It managed to rally off the lows, as you could see during the day. Now, if we take a look at the market, you can see that you've made a recent high all the way up here and backed off a little. If I come back to that high in a monthly chart, and that's what I'm going to do right here. For the month, you were at 29.02 as a high. Then you backed off, and now you're at 28.74. We're not that far away from the high, is my point here. We're sitting in round figures, 28 points, and that's not a big deal at all. When you take a look at the weekly chart, and that's what we do on this edition. On Fridays, we look at the weekly chart. On the weekly chart, the market hasn't had a pattern where it's taken out a prior break in the market. So the pattern remains a consistent one of higher lows, higher highs. When you get down and you take out a prior break low, and I guess we can come back to this one, it would be at 28.36. That would be a number that would concern me because that would be the first real change of a pattern that we'd see. Until that occurs, these pullbacks have each time proven to be what? Buying opportunities. When you go to the weekly bar chart and you take a look at the channels that I've drawn for you, market is certainly staying within them. Got up last week to the upper part of the channel, backing off. But we'll see. There's room here for this market to still be pretty good. And when you take a look in this market at what's going on, you can see you've got the pattern of higher lows and higher highs. That is bullish. When we take a look at where the 18-week moving average of closes is, that is bullish. That is over the 100-week. The 100 weeks over the 200-week. So we're still very much in a long-term bull market. In a corrective mode, not unusual for the month of September. September is one of these rocky months where you go all over the board. History shows that. When we look at the Bollinger Bands, think of this in Bollinger Bands. They're an algorithm designed to give you resistance and support points. And if the market's going sideways, they offer one thing, but when it's in a channel, it's something different. And the channel that it's offering right now is the resistance on these higher points, and when you're hitting it, you're backing off for a week, and then you seem to be coming back and hitting them again. Until that pattern changes, and until you start a pattern of breaking the higher low, higher high, you're still very much in a bullish pattern, and momentum is still up. Is it beginning to turn down? Well, it's certainly wavering, but it has not turned down. It hasn't dropped under the 80 level yet. That would be the turn down. In the Nasdaq, the pattern is very similar in the sense that you have the pattern of higher lows, higher highs, hit the upper Bollinger Band, haven't been able to fall back, just as in the S&P, to this 18-week average in a long time. The difference in this market is that you got your close under 78. Momentum often turns before price, and the momentum in this market for the moment has turned down. And my guess is once we start the new week, that red line will drop even further. When we come to the Dow, like the S&P, momentum has not turned down. The pattern has been one, up until recently, of higher highs, higher lows. But right back here at this 24,955, you broke that pattern. You've got a lower low and a higher high pattern. So yes, it's still very bullish. No, it didn't go all the way back up to some of these other highs. It got close, of course. What do we do with that? Well, you still have the bullish bias to the market. That's what the market is saying. When we get to the Russell, in the Russell today, you had what we call an outside day down. So I'm watching that to see, does it mean anything? The overall pattern of the market is bullish. It's run into resistance at the upper Bollinger Band. It ran into resistance before here and then pushed back down. So a correction, yes. What I like on this chart is the 1678 level is well above the last break low. This market can afford more of a break and still have support. In the VIX, one of the things that I've been showing you on the daily charts is where I think the pros have been selling into upper Bollinger Bands to try to cover at the 18-day average the calls, or selling puts when you hit it to get back to the 18-day average. You do more of that on the daily than the weekly, but the concept is identical. In the 10-year note, on September 26th and the 27th, we have the FOMC meeting. There's a 99.8% probability, you heard that number, it comes off the Fed Watch page at the CME Group, that the Fed is going to raise rates at that meeting, and again in December. Now the numbers are getting into the mid to high 70 probability. So 2 more rate hikes is what the market's looking at temporarily. I think the September is going to happen. December, I don't know, for a reason that's different. I'm concerned about emerging markets. And if the emerging markets continue to weaken and start a world crisis in any manner, all because Fed tightening and dollar strength puts the Fed in a funny position. That's all that I'm saying on it. But right now you have a pattern of a lower low and a higher high. This is a very important chart pattern. It is called sideways, locked in narrow Bollinger Bands, and this is not when they're channeling anymore. This was the channel down. This is the sideways action. From this comes trends, and trends that last. So if the market is going to see the Fed go for the higher rates, well, you would expect to see the futures markets drop. There's an inversion. When they drop, it means real yields are going up. In TLT, we have a pattern of a lower low. Now the market has begun this other breaking, trying to break down. You have a higher high and a lower low pattern in a sideways band as well. Just look from right at this point. You can see the sideways action that the market's getting. It tried to rally up to the 100-day and upper Bollinger Band, couldn't quite get there. Momentum has broken down. When the market closes under an 18-week average, I say the bias is down. You've got those 2 elements. In the dollar index, it's the 100-week moving average that is holding the market on rallies. Now, you did it back here, you did it here, you popped through it, went to the Bollinger Band, slipped down, and again, it's in play as a resistance point. You have divergence on this chart. You have momentum down, the bias up, and a pattern of higher lows and higher highs. In the eurocurrency, you're trying to establish a downtrend on the weekly charts. You've got lower highs, lower lows. That's bearish. You're under the 18-week average. That's bearish. You've had divergence because this has been pointing up and it carried the market to the 18-week average, and now it's thinking of stalling out, as you can see. In the Aussie dollar, the way China goes is the way this currency is going. Why? Think of the big supplying country of raw materials to China, and this currency dropping away. Of course, they've seen a change in their prime minister. Of course, they're sort of caught in a rock and a hard place with what to do with their interest rates, and they still are having lots of problems with drought for another big crop, their wheat. In the Canadian dollar, you've got a pattern where this week you broke through a previous low. So you've got a higher high, lower low, which means no trend. The market's failing against the 18-week and the 100-week average on the rallies. Pulls back down. Obviously, what you have to be fearful of if you're playing this market from the short thinking side at least is what happens if the U.S. and Canada suddenly announce they have a deal. Then you probably get a bounce in the Canadian dollar. In the Japanese yen, the market's up to resistance at the 100-week and the 18-week average of closes. It is not closing over the 18 weeks, so while the swing line is up with the pattern of higher lows, higher highs, you're unable to confirm it by closing over that 18-week average, and momentum has just flattened out on you. In Bitcoin, you now have a pattern of lower highs and lower lows. So this rally ended this week and put the market back into a bearish longer-term pattern. The question is, does it challenge a lower Bollinger Band or not? It has been missing the Bollinger Band since June, so it doesn't have to get there. The question is this week's high. As long as it's not taken out this coming week or the week after, it stands as an important resistance zone. When you look at Brent versus WTI crude, look at how the market went from this 261 level up to 908. One word, Iran. Each day that goes by brings us closer and closer to the Iranians losing more and more production. Already most of the big oil companies are out of there. The tanker companies don't want to do business. Getting insurance is very difficult. Those that buy Iranian oil are almost now telling the Iranians, you truck it to our country. We can't afford to get that done. We don't have a way to do it. And that's what the Iranians will do. But it is causing a pattern of what? This market, a $7 gain all of a sudden almost back over WTI. Brent went up this week, challenged the upper Bollinger Band, backing down to the 18-week average, sideways action developing in the chart, whereas the WTI went up, made a higher high, but it's got a different pattern. It's got a lower and low, higher high pattern, and now it's got a resistance point with this week's high. In the Rebob gasoline, the daily chart was one thing, but this weekly chart says that Labor Day holiday rally over, finished, done. You're not seeing it again. And the other part of it is that with all the crude, with the refinery rates still up, the fundamentals have been bearish. So you got lower highs, lower lows, bearish. You went down to, and you just about held, as you can see, in fact, you did hold it by 80 points, the lower Bollinger Band. You did go through it, and you bounced back over it. Momentum down. Nothing bullish on this chart. I still see resistance on good rallies, back up about a dime or so. And in the nat gas, keep your eye on this one. Here's that sideways pattern again. If it starts out down through it, and I say down through it because we're at that funky time of the year. You don't have a lot of heat. You don't need a lot of air conditioning, which means natural gas goes into a building stage. And if it starts breaking out the downside, I'd be very cautious. We write about all this, and we write about all these different categories. And yeah, we have energy traders that just want energy. We have S&P traders that they don't want to know anything but the financials. And then, of course, we get to the grain boys. They want grains. So everything here that you can imagine, you pick and choose. You get to see for a brief period of time what our clients see. And I don't care if you're a hedger, speculator, commercial user. We talk your language on this. Option strategies, future strategies, spread strategies, option plays, all the way through all that. How do you get it? Give us a call or go to our website. You'll see a carousel of free offers. Click that and away you go. You can always click right up here. It'll take you right to that page. I'm Ira Epstein. You have a good day.